Hello traders, how are you? Vladimir here from Home Trader Club. Welcome to another weekly Forex forecast. Before the chart, as always, big thanks to 8K Broker for their support in our community, and I invite you to explore all the special offers we have with 8K Broker, including the access to Home Trader Club, all the trading systems, the trading strategies, all the tools in the marketplace we have, and private mentoring session. Follow the link below this video in the description. Euro dollar is our first pair for today. Why it is so interesting, as it started the week with a strong move to the downside and now simply bounces back. So the question comes here is it over? Is the bearish pressure is over? I personally do not think so. I think the euro has more to go to the downside. And if there will be no changes, I do think the euro dollar should retest the previous swing low on a daily chart around the 114 and could theoretically drop all the way down to 111, 110. So what levels to pay attention to? First of all, the falling resistance line, of course, which puts the dynamic pressure. But also pay attention to these key levels. Besides the falling resistance line, we also have key resistances, horizontal ones, and supply levels. We are talking about the 116.40 up to 116.70, and then the previous swing high from the daily chart around the 117 up to 117.30. These are very strong levels, and I believe every rally closer to these levels should bring more pressure to the downside. Also pay attention to the volume profile levels we have around the same zone. Sell the rallies is my plan. Pound dollar, is the drop down there is over? Again, I don't think so. The way it does look right now, the pound dollar makes the corrective structure. It did make a good drop, retested the previous daily low, and now bouncing back. However, we don't have any reversal signs. It is lower lows on the chart, lower lows on the MACD moving averages, as well as the RSI, full synchronization. On the 4-hour chart, we also have, similar to the euro dollar, falling resistance line, dynamic resistance level. Pay attention to the resistance here, a broken support became resistance around the 132.50, and to the next key level, which is the daily supply zone, as you can see also based on the volume profile levels, this is around the 134 up to 134.50. As long as these levels hold, I believe that sell the rallies is the correct trading direction. Gold is making a range and very likely is preparing the next move. The question is where to. So the way I see that, we have several key zones on the gold. Of course, the supply level here, let me mark it in different color for you. The supply level here around the broken resistance, and this is around the 40 up to 40.60. Then we have the next key high and key supply zone around the 41.40 up to 41.75, and the next one is the broken supported access resistance after the double top, and this is around the 4200. Right now gold is making a range break below this range, can be a great sign for further bearish continuation. Alternatively, we could see the gold trying to complete a BCD correction and then pushing to the downside. As long as these key levels hold, my view, sell the rallies. And the S&P did the correction down start. So on the weekly chart, we have a beautiful candle formation here, which looks like kind of an evening star. On the daily chart, this is a long divergence, higher highs on the chart versus lower highs on the moving average of the MACD. Pay attention that on the recent highs, even the RSI shows the slowdown. The 4-hour chart completes a sequence of lower highs, lower lows, currently without any signs it's over. So for me, sell the rallies makes absolute sense here as long as the last peak holds. And these are the key levels I want to see holding in order to look for sell opportunities. The supply level here around the 67.50, 67.60 and up to 68.20, 68.50 is, from my point of view, key zones. As long as they hold, I would be looking to sell the rallies.